Stocks could be headed for a steep slump. That's according to Citi strategists. Now, in a new note, the team writing that exposure to the S&P 500 has reached levels historically followed by a 10% drop. Strategists noting that they're not suggesting investors should start reducing their exposure, but cautioning that increasing positioning risks when the market is extended. Last year, the S&P falling more than 10% between August and October as investors worried that the Fed would keep rates elevated for a longer period of time. In order to do that, they were doing that at that time to combat inflation. So here we are at this time, and we certainly have seen the narrative maybe shift just a little bit in terms of the timing of the expectations of rate cuts. We certainly have seen that play out, especially in the moves here over the last 24 hours or so within the bond market. But I think what the Citi is really calling into question is taking a more historical view of where we are right now, the exposure that we are seeing to the S&P, and just warning that last time we saw this, we did see a 10% pullback, and how this setup compares to when we were last having these discussions.
Absolutely, Seana. And it's interesting that they call that out, but they also say, hold your horses, guys. We're not saying reduce your exposure, but we are just pointing out the risks here. And those positioning risks rise when markets get extended like this. They do note, however, though, that investors and accumulated large profits, whereas current P&Ls are positive, but by no means stretched. So I think that's an important thing to point out here. And they talk about, we've got that soft landing potentially on the table here. We've got earnings support moving forward. So the bullish momentum could also potentially continue. It'll certainly be interesting to see whether or not these recent semi-bearish tones that we're getting in notes continue as we get closer to the end of the year.